Hi guys, I hope you are doing well in this corona time. Today we will introduce the saving, investment and financial system. Imagine that you have just graduated from business school of SDU and you want to run the business, but your stipend is not enough for this. As a result, you have to get the money you need from other sources. For this reason, humanity has created the financial market, because the financial market as the institution through which a person who wants to save can directly supply funds to a person who wants to borrow. The two most important financial markets in our economy are the bond market and the stock market. A bond is a certificate that specifies the obligation of the borrower to the holder of the bond. The time at which the loan will be repaid is the maturity date. Long-term bonds are riskier than short-term bonds, because holders of long-term bonds have to wait longer for repayment of principal. The second important characteristic of a bond is its credit risk. The probability that the borrower will fail to pay some of the interest or principal. Such a failure to pay is called default. The third important characteristic of a bond is its tax treatment. In the USA, people pay a lot of money from their income, but in terms of bond, cannot to pay the tax from interest income. Stock represents ownership in a firm and therefore a claim to the profit that the firm makes. For example, if you sell a total of 1 million shares of stock, then each share represents ownership divided 1 million of the business. After a corporation issues stock by selling shares to the public, the shares trade among stockholders on organized stock exchanges. Most of the world's countries have their own stock exchanges on which the shares of local companies trade. In Kazakhstan, we have two stock exchanges, AIX in Nur-Sultan and KASE in Almaty.
Our next topic is savings and investment in the national income account. Saving the total income in the economy that remains after paying for consumption and government purchases. Savings are of two types, private savings and public savings. In private savings, households receive income, pay taxes, and spend on consumption. In public savings, government receives tax and spends on goods and services. If government receives more money than it spends, government runs budget surplus, and if government spends more money than receive, it runs a budget deficit. According to these identities, savings equal to investments. If you deposit your unspent income in a bank, you add to national saving. Investments refers to the purchase of new capital such as equipment or buildings. The purchase of a new house is one of the form of household spending that is investment rather than consumption. Banks make these individual differences possible by allowing one person's savings to finance another person's investment.
For loanable funds, the market in which those who want to save supply funds and those who want to borrow invest demand funds. Supply of loanable funds. As the real interest rate increases, the quantity of loanable funds will increase. Demand for loanable funds. As the real interest rate falls, more projects became profitable. So quantity loanable funds demand increases.